Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Exela Technologies, ticker symbol XELA, and how this stock can literally quadruple your money and why I am not buying this company. So without further ado, let's get right into the story. So Exela Technologies, ticker symbol XELA, provides transaction processing solutions, enterprise information management, document management, and digital business process services worldwide. The current stock price trades for only 79 cents. The low-end price target is $3. The average price consensus for the stock is $3.50, and the high-end price target, we could quadruple our money if this analyst is correct and the stock is actually worth $4 per share. However, currently only two analysts cover this stock and they both give it a buy rating. This company has three different business segments. The first one is information and transaction processing solutions. The second is healthcare solutions, and the third is legal and loss prevention services. Within the last year and over the past 6 months, the stock price for XELA has dropped by 68.5% and 74.2% respectively. The company has also seen a large revenue decline in their last report, and we will also be going over their financials in this video. Their revenues have declined by around 9% over the past 3 years, and their EBIT and EBITDA, which is earnings before interest, tax, depreciation, and amortization, have also decreased on a compounding annual growth rate by around 42.2% and 25.5% respectively. Their leverage-free cash flows have also fallen around 40.2%, so as you can see, I've already set up the picture that this company is not doing so well historically. But has the company changed, and why are so many investors flooding into this particular company? Well, for starters, the XELA stock has gained major momentum recently, and the stock price has climbed by almost 6% over the past 5 days, on top of multiple other huge increases by over 10% recently. And this is mainly due to their various contract renewals and their partnership expansions. So let me tell you about their contracts and the partnerships that they have with some very impressive companies. Just last week, the company announced a renewal of its services contract with a leading consulting firm named Digital Mailroom Solutions, and this has reaffirmed a 20-year relationship with this company. The president of Exela said, "We are proud of our long-standing partnership and the expansion of our strategic DMR platform renewal." On top of this, Exela has expanded another contract with a top global banking company. But this is not the particular reason why I am reporting on the stock right now, because the best news to me comes in the form of how Exela recently announced an extended partnership with their relationship with MasterCard over in the EMEA region. So as this company continuously expands their contracts and relationships with these very large companies, this could increase and contribute more to their overall revenue streams, which have been lacking within the last 5 years. So let's dive into more of their financials. Exela's total revenues have decreased around 8.5% year over year to $279.23 million in the fiscal third quarter, which ended September 30th of 2021. Their gross profit also declined by around 5.1% from over a year ago, down to $67.5 million. Its operating income also decreased year over year by 50%, down to $2.42 million, and they have a net loss coming in at $13.21 million. On top of this, the company's loss per share for their EPS is down 85% recently from the prior quarter, which came in at 0.09. The company also has a lot of debt compared to the revenues that they're bringing in of around $1.52 billion, with only around $146.18 million worth of cash or cash equivalent on their balance sheet. So they have a net debt of around $1.38 billion, which is not very healthy. Their net operating cash flow also came in negative at $37.21 million, while its leverage free cash flow stood at around $24.62 million. However, despite all of this, many retail investors are pouring money into this stock, and we will get into that reason in just a moment. But before I go over the really bullish news for this company, I want to let you know that analysts are not overly bullish on this company. It is very high risk, high reward, and the overall company and stock has a C rating. So basically it barely passes, and this is only for extremely long-term, very aggressive growth investors. This is more of a company where you would swing trade this company unless unless you think this company is going to be good long term, and I'd love to hear your comments down below on whether or not you are trading this company or you think this company actually has long-term potential. The company does have very good plans, however, because they plan to decrease their debt by around 25%, but to me, this is not enough. It has insufficient cash flows and it has very slim margins. So at least in my opinion, before I get into the real meat of this company, is that I would rather wait for this company to actually generate significant profits and revenues before taking on the unnecessary risk of this highly volatile stock. I would like to wait for the fundamentals of the company to take off before the stock price takes off, and that to me would allow me to get a great buying price and a good buying opportunity. But now let's talk about why retail investors are pouring into this stock, and it basically comes back from their plan to buy stock back. XELA is buying back their stock. Up to 100 million are being offered at the buyback price at $1 per share. And the reason why people are pouring into the company is because currently the stock price trades below $1, so people are actually going to make money during this buyback. According to their statement, shareholders can exchange 25 shares of common stock into a tradable $25 note due in 2029 with a 6% annual interest rate. And if you don't know, that is actually fantastic. This is basically free money and the interest rate is actually not that bad. However, I think that the hype that has been created off of this buyback program is way too overhyped in my opinion, and that retail investors should really watch themselves here. The stock has increased by more than 46% in the last few weeks, however, it still remains red for the overall month. But even with that being said, the trading volume of the stock has absolutely exploded to almost 164 million shares being traded. The company's chairman said after deploying more than $400 million of capital in 2021 to substantially reduce debt and extend maturities, we are now deploying capital to unlock shareholder value for our large and growing shareholder base. However, with this being said, I still deem this company as a high-risk investment with very limited upside. I know that quadrupling your money is extremely good, and that would be fantastic if the stock price actually went up to $4, and although this is possible, I don't find this very likely, which is why to me, I am more of a risk-averse investor, and I would rather invest into a company more for the long term. So I would invest in stocks more like Accenture or even WNS Holdings, ticker symbol WNS, which is a competitor to XELA. These are more established companies that give this company fantastic competition, and to me, this company, XELA specifically, just hasn't proved itself yet. I'm not saying that this is a bad company or that you shouldn't invest, but I am saying that you should really wait and think about this investment before you start to dive in on this particular endeavor. Although the current stock price of XELA stock is absolutely surging and it has fantastic retail trader momentum behind it, this will not translate into long-term sustainable growth in my opinion. However, I can always be wrong, which is why I always want to hear your thoughts down below about what you think and what you have discovered about this company in your own research. So with that being said, I would love to hear your comments. Remember to smash the like button on this video, subscribe if you are new, and I will see you in the next YT video.